Hey guys, welcome back to Daily Crypto Analysis. So what we're going to do today is look at the the claim that there's a 4-year cycle and that this cycle will just repeat itself over and over again with relation to the halving. We're going to look at each cycle from its bottom to its peak, and we're going to analyze the length of each cycle and see if looking at the market from that cycle perspective makes any sense. And then from there, we're going to ask ourselves, based on that information, are we still in a bull market or not? So let's go ahead and take a look. So what I've done here is plotted the first cycle, starting back in July of 2010, from its bottom to its peak. And this shows here's the length of days, and this is the return on investment from the bottom. So at the top, we peaked at around 60,000% return on interest. And we did so in about 327 days. So then let's add the second cycle. So the second cycle, you can see it was actually ahead of pace of the first cycle for a short time, then fell under it and moved up, also finishing around 60,000%, but not quite. This got to around 54,000% return on investment. But the key here is it did it in 736 days compared to the 327 days for the first cycle. So adding in the third cycle, you can see again, for a very short amount of time, the third cycle bottom was ahead of the first cycle. Then it fell under the first cycle and fell under the second cycle, moved sideways in consolidation, and then started moving up and reaching the peak of the third cycle. This is the 2017 cycle we're looking at now, and peaking at around 10,500% in 1,070 days approximately. So far we've went from 320 days. Our second cycle was about 730, 40 days, 1,070 days. And the key here is each cycle has demonstrated decreased return on investment. It doesn't mean they're not going up. Obviously they are. They're going up a lot. This, from here to here, you're still up 10,000, approximately 10,000%, but it's not as big of a move as the prior cycle. And so that brings us to where we are now, cycle 4. So here we are, cycle 4. For a time, we were ahead of, cycle 2 and ahead of cycle 3. And then, around this day, you could say this day here, which was day 880. And, if you're interested, we're on day around 1,000 right now. We were actually ahead of this cycle. But then, as we would expect, we fell below cycle 3. Now, you may ask, well, why is this happening? And the simple fact is that as Bitcoin's market cap moves up, this almost has to happen because it takes exponentially more money to move from the prices that we were seeing in 2011 or 2013 or even 2017 to move the price of Bitcoin up to a new high. And as that happens, more money gets into the market. We expect that, to obviously happen along a slower course, as well as the fact that when there's more money in the market, there's essentially, you can think of it as being more stable or less volatile. So while your upside potential decreases at each cycle, 60,000, 53,000, 10,000, right now we're sitting at around 1,300. your upside potential decreases, but so does your downside risk. And that's why Bitcoin is essentially the benchmark for the entire asset class, or the gold standard, so to speak. Maybe one day they'll call it the Bitcoin standard. It's becoming more stable. Now, that's not to say you still can't potentially make incredible, profits from Bitcoin. If you were at the bottom of this cycle, you're still up 1,300%. And I think that's sort of the reason that altcoins, especially the small cap altcoins, are so attractive to so many people. So many people speculating in cryptocurrency, and that's because you still can get those 60,000 or more % gains from the small cap coins. But you're not going to get that in Bitcoin anymore. You can't. You can't, on one hand, say you want the large institutions to come in and drive the price up, and say that you're still expecting 60,000%. It's not logical. And if you're listening to people telling you that that's what's going to happen, you just need to step back and, think about what they're saying, because it doesn't make any sense. We can't have big money coming into into Bitcoin and expect 60,000% gains anymore. It already has, nearly a $1 trillion market cap. So just, do the math. If you go up to 2 trillion, a $2 trillion market cap, that puts you still under $100,000. So, with regards to that, you just have to keep things in perspective. So what we can do from there is then look at these cycles from bottom to peak in a different way. And, we can see some trends actually develop. And so if we look at from market bottom to market peak of cycle 1, about 331 days. And the bottom to peak, the slope of the angle is 60 degrees. Okay. Then we go from market bottom to market peak in cycle number 2, and the slope of the angle is 36 degrees. So we can take the ratio of that then, and we see 36 over 60 is 0.6, and that happened in 894 days. Okay, so about 2.5 years. Interestingly, then we can look at market bottom of cycle 3. So now here's 2013. We're coming into 2015, hitting our market bottom in January of 2015, and we move up, to our peak in 2017. So the slope of that angle was 22 degrees. It maintained the same exact ratio from cycle 1 to cycle 2, from cycle 2 to cycle 3. Additionally, the cycle length increased from about 2.5 years up to 4 years. So taking approximately, 1,450 days. So then, that begs the question, well, where are we at now? And are we at the, was this the peak back in, April 12th of this year? And, based on the way that markets work, based on the fact that Bitcoin is getting much broader adoption now, it's getting institutional investment, and based on, prior price history, I suspect that we are in fact not at the peak. And, so we could take a look at this ratio that we've maintained from, for between 3 cycles now. So what if this slope was about 60%? So that would put us, can do calculation here. So we want to look at 36 times 0.6. Oh, I'm sorry, 22. So about a 13-degree angle that would put us at. So we can look, if we maintained this trend, which is highly speculative, we're going off of essentially 2 data points. Nonetheless, I think there's compelling evidence to believe that, there's, at least something to this. And so we could look at this angle and say, well, what else do we have to ask ourselves? And that's, do we believe there's a 4-year cycle? And, this is another thing, this whole 4-year cycle. Why is it a 4-year cycle? Because it was a 4-year cycle one time? Because halvings are on 4-year cycles? Guys, do you really believe, just think about this. Do you really believe that, institutions and, big money, we're just going to, front load the cycle every 4 years? We're all going to go up, 1,000 to 60,000%. Then we'll all sell in a year and a half and then rinse and repeat. I know there's a lot of people that believe that, but it's almost laughable to think that, like, that's just not how markets work. People will adapt their trading strategies to extract maximum profit, and maximum profit for big smart money is not achieved by doing the same thing that just going with Joe Public and believing that every single cycle for the next 100 years, 200 years will go up right at the beginning, or shortly after the halving, and we'll just nicely go up how much ever percent, how many ever 1,000%, and then sell in a few in a year and a half. It just won't work like that, guys. So as more money comes in, I think we will start to be in a situation where we're moving more and more to be like something like the S&P, where there's long protracted market cycles with maybe even longer downtrends, but in general, very long protracted uptrends. And I think we're, moving towards something like that now. It's not to say that we can't have, big corrections, because I think we can, but I don't think we'll be in, this thing where, we had one time we had a 4-year cycle, and now everyone claims there's a 4-year cycle. The data shows you that is strictly not true. So, just something to think about, guys. I mean, it still leaves the question, where are we at now? And so I tend to think that we will continue to see this phenomena of, lengthening cycles. And so, if that's to be true, I think that will likely to put our, cycle end somewhere between the middle of 2022 and the middle of 2023. Again, it's all speculation, but, we can at least ask ourselves, so where will that put us? And that will put us somewhere, at least going from this trend line, that would put us somewhere between around 100,000 and, up to, I'd say maybe 200,000. It's a broad range, but it's still double to quadruple where we're at right now. So, just something to think about, guys. I think if you step back and ask yourself logically, does, what, some of the bigger names in crypto, what they're saying, does it make sense? And look at the data. Don't ever just take something someone's saying and believe it. If they can't show you why they believe what they believe, then it's questionable information at best. If someone can't support their beliefs with data, it's nothing more than opinion. And that's not to say what I'm saying isn't an opinion. It's an opinion based on the data I'm showing you, but nonetheless, it's at least something that you can look at to support your belief with some level of evidence behind it. So I think that's it for today, guys. So if you like this kind of content, hit the like button and subscribe, and I appreciate you guys. Take care.